Cipher Mining stock had one of its most intriguing trading sessions to date on Wednesday. The stock finished almost flat, closing at $14.14 per share, technically down by just a single cent. But the real story wasn't the closing print. During the session, CIFR reached an all-time intraday high of $15.54. That's right, a fresh record high. For a stock that was under $10 less than 2 weeks ago, that's a staggering move. And yet, by the closing bell, most of those intraday gains had evaporated. So what happened? Why did the stock soar to new highs and then pull back? Was it simply profit-taking, or does this reveal something deeper about market psychology? And most importantly, what does this mean for Cipher Mining going forward? In today's aftermarket video, we're going to unpack everything that happened on Wednesday. We'll talk about the fundamentals that are underpinning this rally, the analyst coverage that may be fueling fresh demand, the macro catalysts that are giving miners more room to run, and of course the significance of that intraday spike to over $15.50. We'll also take a balanced look at the risks that investors need to keep in mind, even in the middle of all this excitement. By the end of this update, you'll have a clearer picture of what's driving Cipher Mining right now and what to watch in the days and weeks ahead. Let's start with the numbers. CIFR closed at $14.14 per share, technically down a single cent, so the day-over-day change looks flat. But during the session, the stock climbed as high as $15.54, setting a new intraday record. That move reflected strong early demand, with traders piling in and momentum algorithms pushing the stock into uncharted territory. But as the day wore on, selling pressure built. Some of that was simply profit-taking. Remember, this is a stock that was trading near $10 just last week. Anyone who bought even a few days ago was sitting on a 30 to 40% gain. At some point, people are going to take chips off the table. So the intraday reversal is not necessarily bearish. It just reflects the natural tug-of-war between buyers and sellers in a stock that has been on a tear. What matters is that despite that selling pressure, CIFR didn't collapse. It held most of its recent gains, finishing above $14. That's still an elevated level compared to where it was in early September. So while the day's close might look like a stall, it's really more of a consolidation after a big run. One of the key catalysts for recent strength in Cipher Mining has been the growing recognition of its hybrid narrative. Earlier this week, Arete, an analyst firm, initiated coverage on Cipher Mining and a few other miners, highlighting their potential as infrastructure providers for artificial intelligence and high-performance computing. Arete's note suggested that Cipher is increasingly being viewed not just as a Bitcoin miner, but as a lower-risk AI compute play, thanks to its Black Pearl facility and joint ventures that give it exposure beyond crypto. That's significant. Wall Street coverage matters because it expands the investor base. Many institutions won't touch a stock until it's covered by analysts. Coverage also brings credibility. If respected analysts are saying, hey, this company is more than just a crypto miner, it's a hybrid Bitcoin plus AI story, then more investors will start to take notice. That feeds into the stock's momentum. The fact that Cipher reached a new all-time high right after this coverage reinforces the point. Investors are buying into the narrative that Cipher is a bridge between two of the hottest investment themes right now, cryptocurrency and artificial intelligence. Of course, narrative alone can't sustain a stock. Fundamentals matter, and Cipher has been delivering. In its most recent update, Cipher reported mining 241 Bitcoin in August, selling 42, and holding 1,414 Bitcoin at month's end. With Bitcoin hovering around $115,000, that treasury is extremely valuable. The company's self-mining hash rate sits at 23 exahash per second, with a target of 23.5 by the end of the quarter. That kind of hash rate puts Cipher among the leaders in the space. Efficiency is competitive too, at roughly 17 joules per terahash. Then there's Black Pearl. Phase 1 of the facility is already contributing about 39% of production, but more importantly, it has been designed to support high-performance computing and AI hosting. That gives Cipher a dual growth pathway, one through Bitcoin mining and another through AI and HPC infrastructure. If AI hosting demand keeps rising the way analysts expect, Cipher could unlock entirely new revenue streams. That's the hybrid narrative investors are excited about. Beyond company-specific factors, the macro environment has been supportive. Last week, the Federal Reserve cut interest rates by 25 basis points and signaled that as much as 75 basis points of cuts could come by year-end. Lower rates are good for risk assets, including crypto and high-growth tech. They reduce the cost of capital for companies like Cipher, which is important when you're building and expanding massive facilities like Black Pearl. Bitcoin itself has also been stable, holding near $115,000. That's a high enough level to keep mining highly profitable. When Bitcoin is steady or trending higher, investors feel more comfortable owning miners. Combine that with broader enthusiasm for AI, and you've got a recipe for strong demand for hybrid plays like Cipher. We're also seeing sector-wide strength. Other miners have been rallying too, but Cipher has been leading the pack. That leadership role further reinforces its momentum. Traders look for relative strength, and when they see Cipher outperforming peers, they flock to it. That creates a self-reinforcing cycle. Strength begets more strength. So what do we make of that intraday spike to 1554? On one hand, it shows that buyers are still willing to push the stock into new territory. That's bullish. It tells us there's demand above current levels. On the other hand, the failure to hold those gains suggests there's resistance around $15 and change. That's not unusual. Stocks rarely break through major psychological levels on the first try. It often takes multiple attempts, with consolidation in between, before a new level becomes sustainable support. In other words, the intraday high should be seen as a test. The stock showed it can get there, but it's not ready to live there yet. That sets up the next phase of trading. If Cipher can consolidate in the $14 to $15 range and then make another run, it could break through and establish a new base above 15. If not, it might pull back to retest lower support levels, perhaps around 1350. Either way, the action tells us that buyers are still active and demand is real. It's also worth noting that this resilience comes just a day after news broke that V3 Holding, one of Cipher's largest shareholders, sold around 2.7 million shares worth $33 million. Normally, insider selling of that magnitude would spook investors. But Cipher's stock not only held up, it pushed to new highs. That tells us that demand is strong enough to absorb supply, which is a very bullish sign. It also tells us that investors are focusing on the bigger picture rather than short-term noise. That bigger picture is the Bitcoin plus AI hybrid narrative. Investors don't want to miss out on a company that's positioned at the intersection of two transformative trends. That fear of missing out is driving momentum, and it's helping the stock shrug off potential negatives like insider sales. Of course, it's important to balance the excitement with caution. There are risks here. Bitcoin's price could turn volatile, and if it drops sharply, miners like Cipher will feel the impact. Energy costs are another factor. Mining and HPC hosting consume huge amounts of power, and if energy prices rise, margins could get squeezed. There are also regulatory risks, especially around Bitcoin mining and environmental impacts. And while the AI hosting narrative is compelling, it still needs to be executed. Cipher has to attract clients, secure long-term contracts, and prove that it can compete in that space. Technical risk is another consideration. The inability to hold 1554 today suggests resistance. If the stock fails to break through in the near term, it could consolidate or even correct. That doesn't mean the long-term story is broken, but it does mean that short-term volatility is likely. Traders need to manage risk carefully, setting stop losses and being prepared for swings. So what should investors watch going forward? First, keep an eye on Bitcoin. As long as it holds near $115,000, the backdrop remains supportive. Second, watch for any new announcements from Cipher about AI hosting deals or further development at Black Pearl. Those would reinforce the hybrid narrative and could drive the next leg higher. Third, monitor analyst coverage. Arete's initiation was significant, and if more firms follow suit, that could expand the investor base even further. Finally, keep an eye on technical levels. $14 is now support, $15 is resistance, and 1554 is the intraday high to beat. A sustained move above 15 would be a bullish breakout. To sum it all up, Wednesday was a fascinating day for Cipher Mining. The stock closed nearly flat, down a single cent at 14.14, but it reached a new all-time intraday high of 1554 before pulling back. That tells us that demand is strong but resistance is real. The fact that the stock held most of its gains and didn't collapse shows resilience. Analyst coverage, solid fundamentals, a supportive macro backdrop, and the powerful Bitcoin plus AI narrative are all working in its favor. Yes, there are risks, from Bitcoin volatility to energy costs to execution challenges, but the market is clearly looking past those for now. Investors are focused on the upside potential, and they're willing to buy even in the face of insider sales and resistance levels. That makes Cipher one of the most interesting stocks to watch in the current market. The key takeaway is this: Cipher Mining is no longer just a Bitcoin miner in the eyes of investors. It's becoming a hybrid play on two of the biggest trends of this decade: cryptocurrency and artificial intelligence. That's why the stock keeps finding buyers, that's why it's hitting new highs, and that's why the market is willing to shrug off potential negatives. As long as Cipher keeps executing and the macro environment remains supportive, this story has more room to run.